Understanding the required documents and the financial outlay is the key for clients to make an immediate and informed decision with zero stress. The process is remarkably simple, provided your client has their identification and they are transparent about the source of their funds. Dubai's regulatory body, RERA, under the Dubai Land Department or DLD, has made the transaction process clear and secure. For a standard cash purchase, ready or off plan, the documentation is very light, designed for global investors with a valid passport copy, must have at least 6 months validity, or Emirates ID and client's proof of address. RERA Form F, the MOU. This is the official memorandum of understanding or the contract of sale. We, as RERA agents, complete this document once a price is agreed upon. Client's signature legally binds the deal. Proof of funds, normally past 6 months of bank statements showing client can cover the initial payment and closing costs. This ensures compliance with anti-money laundering AML regulations. Power of attorney, POA, if client is remote. A notarized and attested POA, translated into Arabic, if client cannot be physically present to sign the final transfer documents at the DLD trustee office. Required funds, the upfront investment, the DLD's 4%. This is the most critical part of client budget planning. The total upfront cost is typically 7% to 8% of the property's purchase price, in addition to the down payment. The down payment or security deposit, the reservation. For ready or resale property, clients should expect to pay 10% of the agreed purchase price upon signing the RERA Form F, the MOU. This is held by the agent or trustee as a security deposit until the transfer is complete. For off-plan property or new launch, the initial deposit varies but is usually 5% to 20% of the purchase price, paid directly to the developer's escrow account. Mandatory Dubai Land Department, DLD fees. This is the single largest closing cost and is usually paid by the buyer via a manager's check at the final transfer. It is 4% of the total property value or price. Buyer pays for the DLD transfer fee, which is the fee to transfer the property to buyer's name. It is a mandatory government fee. Transaction fees, real estate agency fee, 2% of the property price, plus 5% VAT. It is our commission for securing the deal, handling the paperwork, and providing expert advice if it is a secondary market sale. For off-plan property sales, it is usually 3% or more. No objection certificate, NOC. Cost is AED 500 to AED 5000. It is a certificate from the developer or master community confirming the property has no outstanding service charges, usually paid by the seller. Trustee office fee. Cost of AED 2000 to AED 4000 SASN plus 5% VAT. Fee for the DLD approved trustee office, which facilitates the final transfer in a secure legal environment. To make this easy to digest, let's look at an example of a property costing $1 million dirhams purchase price. Mortgage versus cash buyer procedure. Is your client considering a mortgage? Non-residents can get mortgages in Dubai provided it is a ready property up to 70%. Off-plan properties must be well above 80% construction milestone to be considered by local banks.